Ladies and gentlemen, welcome to the Godrej Consumer Products pre-Q FY22 earnings conference call hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Ashit Desai from Emkay Global Financial Services. Thank you, and over to you, sir.
Yeah, thanks, Faizan. Good evening, everyone. It's a pleasure to host the management of Godrej Consumer Products for their Q3 earnings call. I'll hand over to Prateek for the initial introductions, post which we'll go ahead with the management comments. Over to you, Prateek.
Thank you, everyone. Good evening and welcome to the conference call of GCPL. We hope that you are staying safe and healthy. We will be covering this evening the results for the quarter and 9 months ended 31st December 21. On the call with me from GCPL is Ms. Nisaba Godrej, Executive Chairperson, Sudhir Sitapati, Managing Director and CEO, and Sameer Shah, CFO. We'll start with Sudhir talking about our performance in the quarter. Over to you, Sudhir.
Thanks, Prateek. Good evening, everyone. I hope you and your families are safe and healthy, and thank you so much for joining the call today. I'll first start with an update of our performance. We've had a mixed quarter in Q3 FY22. While our overall sales grew by 8% and we remain on track to achieve double-digit sales growth for the year, it was driven entirely by price-led growth and flat volume growth. On the other hand, while our overall EBITDA degrew by 2% and PAT declined by 1%, the quality of our profits has improved. In Q3, we were down 210 bps on EBITDA, similar to the drop in Q2. However, this was driven by sequential improvements of 70 bps in gross margin and 90 bps in increased A&P investments. Our performance, while different across geographies, was similar in being near flat in underlying volume growth. Home care was 3%, personal care well, India was 8%, Indonesia was -2%, but even here volume was actually flat, and Africa was 12% with also flat volume. So the big story for the quarter is really flat and muted volume performance. And our reading is the significant price increases we've had to take. In our experience, this level of inflation is unprecedented, like we saw in 2008 last, and it does affect volume growth in the short term, largely through pipeline reductions. It may also affect discretionary spending and add to downgradation and have an impact on real income. But given the relatively non-discretionary mass pricing of our portfolio and our good performance on market shares, we think that some kind of volume growth will come back in the next few quarters. We have two areas we'd like to call out which require deeper assessment. One is Indonesia, the second is household insecticides in India. In Indonesia, during the first wave of COVID-19 in mid-2020, we launched Saniter, a disinfectant brand. While the brand did very well during the COVID period, the larger macroeconomic situation and frankly, perhaps too much focus on Saniter at the expense of our core portfolio meant that the overall results weren't great. Now with the pandemic impact waning and increased investment in the core portfolio, our core volumes are starting to grow. But the Saniter base is pulling down overall results. Indonesia results will take a few quarters to improve. It may even get worse in the near term as the Saniter comparator becomes very large, but we are convinced we're on the right track here. Household insecticides in India was lower than our expectations this quarter. We have always mentioned in the past that HI is a category that shouldn't be seen on a quarter-to-quarter basis. We believe that there was an adverse seasonality in south and east of India, while season was quite good in the north of India. Overall, category has seen a pattern of high and low consumption over the past few years. There was in the comparator a high consumption driven by COVID, more people staying at home and increased consumption on health. And we do see low consumption driven by waning COVID fear. However, with leaving these seasonalities and COVID impacts aside, we fundamentally believe that there is huge potential to grow in the HI category in India. Indonesia, with twice the GDP of India, has 2.5 times the consumption of household insecticide and has successfully premiumized the category into aerosols. Our number one priority in the medium term is to drive category development and scale up growth in household insecticide. On the margin front, we felt that costs had peaked and we should see strong improvements in gross margins and moderate EBITDA improvements. However, commodity basket, especially the palm oil fractionate that we use, PFAD, continues to be choppy. But the bigger story of medium-term gross margin expansion and moderate margin expansion remains intact with significant investments in A&P. We continue to have a healthy balance sheet and our net debt to equity ratio continues to come down. We are on a journey to reduce inventory and wasted cost and to deploy this to drive profitable and sustainable volume growth across our portfolio through category development. On the people front, after 11 high-impact years, Sunil Kataria, CEO of our India and SAARC business, has decided to pursue an external opportunity. I will directly run the India and SAARC business as CEO in addition to my responsibility as MD and Global CEO. As always, our values matter the most at this time. We were recently ranked number 1 among the top 100 companies in India for sustainability and CSR initiatives in 2021. This ranking is based on a survey conducted by Futurescape and published by the CSR Journal. We remain committed to doing our best to truly live the Godrej way and serving our people and communities. Thank you.
This is the operator, so should we start the flow for Q&A?
Yes, we can.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Avnish from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on hair color in India. So when I see the base, it was not very high. So on a 2-year basis, the base was around 10% growth. So we don't have the number this quarter specific, but you have called out that it's a soft quarter. So you have scaled up the 5-minute shampoo. If I see mobility for customer in Q3, it was broadly normal. So many companies have called out that discretionary demand has been fairly good in Q3. So in that context, hair color soft performance, how do you see that?
Yeah, no, I think in hair color, there are 2 or 3 things going on in hair color. One is we took a very sharp price increase on part of our portfolio, and that affects it. So even within the quarter, we saw that we took the price increase in September, and typically what happens is the old stock gets stocked up and then the new price, so there's a price transition. There was also, if I'm not mistaken, Samir, a very strong competitor of shampoo hair color in the base. I think the good thing in our hair color businesses, we continue to gain share in India overall in hair color.
And just to add, Avnish, I mean, on a 2-year CAGR basis, growths were, close to high single digits. So we are not too overly worried, I mean, on the hair color's performance in the quarter. Yeah, I mean, on the face of it, optically, it was a relatively soft performance. But on a 2-year CAGR basis, it was quite fine.
Sure. My second and last question is on advertising spend. So in the December analyst meet, Sudhir, you had said that you'll be delinking the media spends from short-term goals. You had also said that you will cut down on the non-media and ATL. My question is, when I see your advertising spend this quarter on YOY basis, there is a saving. So it is YOY flat. So there is 57 basis points saving as a percentage of sales. Market leader in soaps, obviously, they don't give category-wise spends, but on an overall basis, HUL did cut down significantly on ad spends. So is that helping your overall ad spends also in terms of soaps and non-media ATL?
No, I think, Avnish, while the overall media may be flat Y on Y, and Y on Y has various things, if you look at it sequentially in absolute crore rupees, it has significantly gone up in Q3 versus Q2. So ultimately, media is a good thing to look at sequentially because, and in rupees crores. And that is generally our strategy. Some of these media investments, Avnish, they don't pay back immediately, but they pay back pretty soon. And we will continue to do that as we go along because our strategy remains committed to category development. There will be some, volume bumps, as all of us know, in the next few quarters. But I think if we are razor sharp on category development, driven through increased brand investments, we'll come out of this quite well.
Just one small follow-up. So reversal of impairment on B Blunt in the India part, so 15 crores. Could you elaborate why that has happened?
Yeah, so Abnish, we have remeasured actually the fair value of our investments in B Blunt, and just to refresh, we had impaired it in flag end of FY22. The remeasured fair value is much higher than actually the book value, and that results in impairment reversal in the quarter.
Okay, that's all from my side. Thanks a lot.
Thanks, Abnish.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. So my first question is on the HI space. Now, you are right that, quarterly there is seasonality. I just wanted to kind of understand from you, this is the second quarter of soft performance, and that also on a 2-year basis. Would the read-through in your argument, would it be fair to say that market shares are not kind of remaining healthy, and it's an industry issue? If you could just kind of give us more clarity on why this is happening and what can drive a change so that we can understand that better. Thank you.
No, thanks, Avi. No, firstly, market share, like in hair color, we are gaining in household insecticide on a MAT and on an L3M basis and on an LM basis. So whichever way we look at it, we're gaining share in household insecticide. I think household insecticide had a very high, and you'll see it in the next few quarters as well. COVID, it had a very strong COVID tailwind, and therefore it's lapping now relatively tougher competitors. But I think the bigger issue that you said remains, which is we have to, over the next few quarters, find a market category development trigger for household insecticides in India and grow that category. And models are available for us in the rest of the world. It's just for us to adopt and invest and do it with discipline. But I would say it's an unsolved problem. I mean, it is a fluctuating category, but the honest truth is that we've got to solve this problem, and I hope we'll do it in the next few quarters.
But Sudhir, the COVID impact was seen more, and the COVID benefit was more in the fourth quarter, right? And we saw second quarter and third quarter was a supply side issue that you were facing. There was some impact because of that. So which is why I was confused from a 2-year CAGR also. For the last 2 quarters, we are seeing only maybe mid-single digit or something of that sort kind of growth. So is it that the industry itself is taking some time to come off? Because I'm comparing on a 2-year basis.
No, see, I tell you the thing is, I think that's a valid point. I think we do feel like the South and East has had a relatively poor season in these few months, and that sort of accounts for it. But over a slightly longer period, you will find very high COVID bases. I think in Q1 of
9 months period, actually, we had a relatively high COVID base. And I think as Sudhir was saying, what's happening is, because of this patterns of high consumption, low consumption, perhaps we are in, very short term, in a low consumption generally environment, right? As a result of which our overall growth rates are relatively lower, but market shares are, sort of moving up. And again, as we had called out in December analyst meet, also what Sudhir just reiterated, that we will see, couple of hopefully big, key consumer bets and, on-ground execution of it in coming quarters, which should, kind of get us back to, desired growth case.
Oh, okay. The second bit was on the margins. So while you have clearly called out a focus on driving double-digit sales growth, would it be fair to argue that, because there's input cost pressure, because there is a mix change in Indonesia, in near term FY22 margins are likely to be under pressure at the EBITDA level, or you would kind of work on cost control? If you could kind of help us look at that as well. Thank you.
Yeah, I think the model remains the same, right? That how do we work on improving the quality of profits, and while again in Q3 the overall margins in terms of contraction are more of the same as we saw in Q2, but we are pretty pleased with the quality of profits in terms of sequential expansion in gross margins, reinvest that back for growth, and growth will come, right, in coming quarters. because there will be a lag between investments and the growth. My model should continue even in very short term. I mean, we are relatively optimistic that this trend of sequentially improving gross margins, at least in India, should continue. We will also continue to see higher investments, and we will perhaps also start seeing, kind of lower margin contraction, or if all goes well, actually even margin expansion in India. I think Indonesia is going to be a little, kind of other way around, where in very short term, I mean, we will see, a bit of, challenges in terms of sales because of high sanitizer base, and also working on some of the core, kind of key consumer bets, which will take a quarter or two. And secondly, we had abnormally, kind of high base, I think some 35% EBITDA, margin quarter four. Well, sequentially, again, we think the margins, could expand even in Indonesia, but on a YOY, of course, they would be, on the lower side. But on the whole, you will see, sequentially improving, kind of quality of profits with higher gross margins, part of it getting reinvested back for growth. And as Sudhir said, the bigger story of, moderate EBITDA margin expansion, medium gross margin expansion, very much remains intact.
Okay. Thank you, Samir. If I may, bookkeeping, any guidance for the tax rate for FY22, because we've seen a good reversal in this quarter, so that will be 22 and 20. Thank you.
Yeah, no, I think this quarter has a deferred tax reversal in Indonesia. It's because we had to remeasure our deferred tax assets because the tax rates actually moved up by 2% over there. I think we can stick to 22 to 23% range again for next year.
This is for FY23, right? You're saying? For 22, it might be slightly lower given this reversal.
Correct.
Okay, perfect. Thank you. That's all from my side, Samir. I'll come back in the queue for other questions.
Thanks.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hi, team. A couple of questions on the overall. So one, Indonesia, just wanted your perspective.
Mr. Menon, sorry to interrupt you. The audio is breaking from your line, so please check.
I don't know. I'm actually talking very close to the mic. Is that okay?
It's now fine, Manoj. Thanks.
Thank you. Okay, no. On Indonesia, Sudhir, Samir, and team, just wanted your views on, let's say, how do you see the macros minus sanitizer, etc. Because, ultimately in a discounted cash flow, the underlying does matter. So, it's not really about year on year. What I'm trying to understand here is, after many years of, let's say, macro headwinds, at least in my understanding, that there is a general view that Indonesia as a country, as an economy, is let's say likely to see a cyclical upturn. I just want to check how are you looking at it, and why that matters is that your view, whether it is you share my, let's say, optimism, if I can use that word, will depend on the plans you make. So that's a question number one. How do you see Indonesia macros for the next year, 18 months, etc. as it stands today?
Maybe I'll pass on the question on macros to Samir, but I do feel that we are seeing green shoots in the revival of our core business volumes even in Q3, Manoj. So I'm quite optimistic that over the next quarters, while the overall numbers may not look great, the core part of our business may be back to growth, I think, after several quarters. So I think that also augurs well for the macros. I don't know if there's anything to add on that.
No, I think the headlines on macros, Manoj, whether you look at GDP, whether you look at even the overall, cuts within FMCG, food, non-food are, kind of gradually improving, right? Currency is also stable, so we do believe that, macro will see, continue to see gradual recovery as we have seen, at least over the past couple of quarters. In terms of why the performance is what it is I would say part because of, sort of a base of hygiene sanitizer. And also again, what we had called out in December meet that, we over-invested perhaps on sanitizer maybe marginally at the cost of, core, which is what we are correcting at this point in time. So we remain very optimistic, and, we share your optimism, I should say, on macros, but more importantly, the potential of Indonesia business in medium to long term.
The business plans which you make or which are already made, let's say for the next 12-18 months, is assuming a certain recovery, right? Can I interpret it that way?
Absolutely.
I think it's assuming a certain recovery in our core business, and the sanitizer base is what it is. So then the rest becomes mathematical, and that we can't see growth honestly coming for the next 3-4 quarters given the way the numbers are stacked. But yes,
No, Sudhir, Samir, look, I'll tell you. Let's roll forward 3 months, 6 months, 9 months, 12 months. Look, I think, if you could help us, let's say, a memo, MIS number saying, look, X Senator, this is the growth, that would be super helpful, given this one-off, in somewhat which is there, because I'm trying to look at the trajectory rather than the noise in the number.
To be honest, Anuj, it's very difficult to call out a specific number.
Even qualitatively, we'll
call out.
Sure.
No, I think, our plans are looking robust. Is that, what I can share. I leave up to your expertise to convert our English into your math. But ex-senator, for sure, the plans are looking robust. But more importantly, beyond the financial plans, it's the, kind of key consumer bets plus which we are, looking at executing over a period of time. As I said earlier, very short term, there will be, subdued performance. But maybe from, quarter 1 or quarter 2 of next financial year, overall as well as ex-senator for sure, the growth rates as well as the overall margins profile will be better off.
Understood. Secondly, just quickly coming to India, given the, typical interplay of gross margins and the ability to invest, in newer categories and newer launches, A&P basically, how do I think about the next 12 months, 18 months, the way you are planning currently on NPDs?
I think, Manoj, firstly, the strategy is not, at least for the next 12 months, as I said in the earlier quarter, based on too many new things. It's based on category development on our core businesses, particularly household insecticides, but even the others, air and hair color. The gross margin, we hope to see, a medium recovery. Actually, we believe we're actually in the middle of recovery of gross margins. And we hope to see that as things go, unless, there's some major shock in commodity even further than what it is today, which one never knows. And some part of it we will plow back into EBITDA, and some part of that we'll put into brand investments.
Very clear. Thank you, Sudhir. And last question, if I may, and I'll come back in the queue. Look, given the unprecedented input inflation, what we have seen, let's say after 10 odd years, at least in my sense, talking to a few FMCG CEOs, listed, unlisted, put together, the sense which I get is that there is a fair amount of trepidation to, let's say, implement further price increases, if God forbid, if there is a further inflation. Would you agree with this hypothesis? Because basically there are, CEOs are worried that if, let's say, crude goes from 90 to 120, I'm just putting some numbers so that I'm conveying this correctly, that the ability to actually take a pass-through without really having significant adverse effects of price elasticity, I don't think that confidence just doesn't exist today. Would it be correct to make this statement?
Yeah, look, it will not be very pleasant for us if costs go up significantly further than what they are today. Look, I feel the way to look at the Godrej portfolio is our business is pretty non-discretionary. It is pretty mass. So in some sense, inflation benefits us in the medium term. But when you have hyperinflation, we have to keep consumer interest at heart. It's not that you can't price, and these categories are not structurally elastic, soaps or household insecticides, people need to use them. But we tend not to, pass them on suddenly, which is why, we have reasonable confidence that if commodity is roughly where it is over the next, 9 to 12 months, this is the journey of margin. But if a sudden rise in commodity, I guess from our point of view, we'll keep consumer first, Manoj. We'll do what's right for consumers first. And then we're in this for the long game, and we'll sort of postpone the margin expansion.
Just to add, Manoj, for us, the commodity basket is not just crude, right? I think the bigger, impact comes in from, palm oil prices, and they are at their, lifetime historic, sort of high. Again, it's anyone's guess as to what would be the direction, in medium term, but let's see, how that, kind of shapes up. So from crude, I would say, we do get impacted, but the impact is, honestly not that big as compared to what it is from palm.
Sure. Thank you, Sudhir and Samir. I have a few follow-ups actually based on the response what you said. I'll come back and give you or take it offline. Thank you so much. Good luck.
Thank you, Manoj.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi team. My first question is on Indonesia. You called out the senator issue, which is, I understand that, although I don't think on a 2-year CAGR basis it should make a difference. But in any case, we will ignore that. But excluding senator, if you could just rank starting from best to worst, the three categories that you have in Indonesia without giving me any numbers or anything on a 2-year CAGR basis, which has done the best, which has done moderately, and which has done relatively not so good. That's my first question.
So I can give you directional inputs again, Percy, and not actually, specifics. But yeah, I mean, I can begin with is, hygiene portfolio, the growth rate, would be close to mid-single digits in, rupee terms. So that's the big, kind of base impact which we were, calling out. And unfortunately, it will remain at least for next, quarter to two. I think in terms of, sequencing largely, I think both HI and air fresheners, remain in, positive zone on a YOY as well as on a 2-year CAGR basis. And baby wipes is where we continue to see, challenges on a YOY as well as on a 2-year CAGR.
But Percy, I don't want you to take the impression that, Indonesia is all about the Saniter base. As both Samir and I said in the past that during the COVID period, I think we would have done things differently in hindsight. And I think there's a lesson here for all of us, which is when there's a big shock like COVID, one tends to just change all one's plans and, go behind something new. And, as a consequence, sometimes one forgets the core. And I guess that's the lesson. Of course, this kind of period nobody's really faced before, so it's not fair to blame anyone because it's a really volatile situation. But that's the lesson to learn, which is regardless of the volatility, one has to be focused on the core of one's business, and whatever is new, one has to invest in it only, within proportion. I guess that's the lesson we have to learn as a business.
Understood. Secondly, I just wanted to understand as far as the India HI business is concerned. See, the overall top-down view is very well understood. Lack of penetration, you have to grow sort of penetration, you have to grow usage, you have to upgrade people to new formats, etc. That's the top-down story that any consultant or any even player in the market, if he analyzes this, he will come out with these steps that need to be taken. But if you can just sort of give a better idea or a little more detailing, of course, I'm sure not everything can be said due to competitive reasons, but whatever you can in terms of the actual steps that you're taking, so as this top-down story actually plays out, because till now it's always remained a sort of opportunity, but that opportunity has not fructified fully. So what will you do to make it fructify?
No, Percy, it will be hard for me to say that. So maybe in the next quarterly meet or the quarterly meet after that, once we've done what we have to do, we can talk about it because it's not correct for me to speak. But look, category development has 3 or 4 general things that one has to do. One has to firstly find a trigger for category development. Why should somebody use the category? That is question number 1. Question number 2 is one has to invest significant amounts of A&P behind it. One has to get lots of trial, distribution, and affordability. These are like just first principles of category development. So how we play that in HI, I guess we'll tell you once we do it or once it's public. But this is how we have to think about it.
Understood. And one last quick question. How would you look at FY23 as an overall sort of context for us analysts? Would you say that with FY22 margins being under pressure, and here I'm talking about at the EBITDA level, would you say that there's a fair degree of probability that FY23 will see YOY margin expansion? And also in terms of the top line growth, given that FY22 already has seen some amount of price increases on that high base, do you see FY23 top line led more by volume or more by pricing on a YOY basis?
Yeah, Percy, I think I've spoken about this in the last quarter, and I think broadly the view remains unchanged, which is if commodity costs are in the vicinity of where they are today, which is a big if, but let's start with that because these are very high prices, they could go either way, then I would expect that in do nothing it will be low volume growth, but I hope we can do better than that in terms of volume growth, because I think it will come to I hope if we do a good job, we'll go beyond low volume growth, from no volume growth to low volume growth to somewhat reasonable volume growth. There will be high price. I think there will be good gross margin expansion, and there will be medium EBITDA expansion. This is how I would still say, looking at the cost situation. This can change, of course, if there's a sudden inflation, as you said. If PFAD goes to $1,600 or crude goes to $120, we'll have to come back with a different view. But given where we are, this is the view that I would have for, you'll be able to then do the maths in where you think we'll end up.
Understood. Thanks a lot and all the best. That's all from me.
Thank you.
Thank you. The next question is from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hi, good evening, everyone.
Hi, Vivek.
Hi. Two things, Sudhir. One is on the India business. So, I hear you on the category development, and these things will take time, and you have articulated it well, now as well as in December. But, do you think there is a need to be a bit more aggressive on, let's say, distribution expansion? So, I recall, I think about 7-8 years back, Unilever in a matter of 12 months tripled its direct distribution reach. Do you think something like that could be done, or you think, given the current portfolio, because I know the two companies' portfolios are very different, but what is your sense on, let's say, targeting distribution first, which is more, more in your control as against, let's say, category development, which takes its own course?
I mean, my answer is outside India, I think there is a lot of scope for numeric distribution. I think our distribution is less than our demand. I think in India, there is scope in targeted ways for distribution increases. In some parts of the country, there is scope for distribution increases. But I think the broad story in India is that demand has to come first and distribution next, Vivek. Whereas perhaps outside India and our own business, it's the other way around. With some exceptions. So it's not like there's no big distribution task, but that's my instinct on India.
So does that mean, Sudhir, when we look at your, let's say, rural salience as compared to, some of the other companies, you are quite under-indexed. So does that mean that this portfolio, particularly the HI, is less relevant to rural, which is why you think that, distribution side up? Because I would have thought that distribution side upside could have been significant, at least, from a rural salience perspective, given that the starting point for you is far lower than, for some of the other companies. Can you clarify that part?
Our soaps business is very well distributed in rural. So we have a pretty good rural salience in our soaps business. Our overall salience is low in HI. So it is not that we don't have I've traveled now to several parts of India with GCPL, including last week where I was in rural Tamil Nadu. I find our rural distribution very good for GCPL, especially in soaps. Now, the question is in our household insecticide product, I think category development involves, driving rural demand for household insecticide, and if we do that, it will go on the back of our distribution system, which is really good. So, which is what I mean in India, that for some of these categories, hair color, HI, and in air care, we have the distribution network in India built on the back of soaps. But we have to build demand for these three categories and let them go to where they have to go, and then perhaps we can ask a question on the next round of distribution, Vivek.
I see. Okay, sure. And second thing, somewhere, I know again the context was different, but somewhere you mentioned that, the input price inflation is similar to, what you had seen probably in 2008. And that's a comment that a lot of companies have made. But, either a GCPL specific India business comment or industry side comment, but when we look at, let's say, 2008 or let's say F9, India margins for GCPL at EBITDA level were down about 500 basis points or so at the EBITDA level, I'm saying. This time around, the margins have been relatively tighter. So when you think about, when you say that category development will need investments and trial and whole host of things, despite which you expect that medium-term margins will still EBITDA margins will still moderately go up. And this is despite the fact that the starting point is not as bad as it was in 2000 or FY9 at that point of time. So can you clarify, is there a possibility of margins first going down and then moving up?
There's always a possibility, but I would say, again, and depends a lot on costs, but I would still say, as sitting where we are, we're sitting on relatively low comparator of gross contribution. That is step one. Step two is we have a very, very aggressive cost-saving programs, which actually we've implemented this year as well. One of the reasons, despite the kind of gross contribution dilution we've seen, EBITDA margin dilution in India, is there's been a terrific controllable cost program, which we will continue going into next year. And thirdly, one of the silver linings is we also expect to see leverage because our industry is, affected by commodities which are inflating. We certainly expect our turnover growth to be significantly greater than general inflation. And therefore we will get leverage. So these are the three sources of margins, Vivek, and I'm reasonably confident that we will, with these three sources, be able to invest in brands and show moderate, but not huge, but moderate EBITDA improvement.
Yeah, I think just to add, Vivek, the point is not just, gross margin expansion, but also this big controllable cost drive, and it kind of straddles across, functions like supply chain cost, like materials, or even, kind of your margins, purely from a sales system perspective. Non-working media investments also in the overall marketing piece, and then of course what we call as HR, kind of clusters, right, the overall overhead. So there is a very strong, kind of plan on that front, and we, believe at this point in time that we should get, kind of good enough, savings coming in from those controllable costs, which will get redeployed, for investments, which in turn should drive growth. And combination of that plus gross margins recovery should result in moderate EBITDA margin expansion.
And Vivek, just to answer your question on distribution, I think once again, which is, physical and mental reach are equally important. At all points in time, one has to look at where is the bottleneck. And I think a lot of the efforts in some of these categories is to first increase mental reach and then physical reach will follow. So this physical reach is not the only thing that is in our hands. Mental reach is equally important and in our hands.
That's very interesting. And just on the point of on margins, I think my only submission will be, any growth, a growth which is at the cost of margins is not that bad, given that, all the FMCG companies are sitting on literally life 5 margins. So even if you invest behind A&P spends and get growth, I think market will view it much more positively than what probably you will fear. And yeah, thank you and all the best.
We always have in the past also, right, that if there is a very serious trade-off between, growth and margins, will be skewed towards growth and not margins. So that remains, very much intact.
Looking forward to that, Samir. All the very best.
Thanks.
Thank you. The next question is from the line of Alok from Ambit Capital. Please go ahead.
Yeah, hi. Thank you. Good evening. So I just wanted to check on the Indonesia business. So what could be the risk or threat to your hypothesis of growth resumption? And here again, I'm excluding the macros, I'm excluding the sanitizer. So could that be category-led risk, distribution, or any other risk that you can think while we talk about growth resumption?
Yeah, look, I can't say that, you see, firstly, Indonesia has a salience of about 15% to our business, so we have to look at it in that context. When we're looking at risks going forward. Within that, yeah, look, there's a lot of scope in terms of, in Indonesia, there's a lot of scope on physical distribution. I would say that is even more important than mental reach. So, we've got to increase our physical distribution in Indonesia, which I guess is something we've got to execute and do. We've got to, again, invest behind our brands, which we probably need to do more of. And there's a macroeconomic risk. So I'm not saying that but we factored this in when we are giving a rough commentary on what's likely to happen in Indonesia, which is we don't see growth for the next few quarters. Can it go worse than that? Perhaps it could, but you'll have to see, how much worse on 15% or 13% of the company is what it is today for us.
Got it. And my second and last question is on the statement when you say about seeding new go-to-market initiatives in Africa and micro-marketing initiatives in personal care. So to the latter, I'm assuming still you are looking at distribution expansion or state, further reaching into newer territories within India. But in Africa, is it new geographies or is it new distribution platforms? What is exactly that you're doing? Thank you.
No, I think in Africa, I would say the number one priority is physical distribution. I feel like we've got a great portfolio in Africa, increasingly of our FMCG products that are doing really well, both in hair and more recently even in household insecticide. And our number one priority is to drive physical presence in Africa.
And that would be largely in the general trade, I'm assuming. And would that be more through wholesalers or distributor? How does that really work?
Yeah, I would say like our number one focus country in Africa is Nigeria. I think general trade through retailing and building a good solid retail infrastructure in Nigeria over the next 12 months would be the big priority in Africa. I feel like our FMCG business in Nigeria in particular and Africa in general is a tipping point.
Got it. Thank you very much and wish you good luck for the next week. Thank you.
Thank you. The next question is from the line of Abhijit Kundu from Antique Stock Broking Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. My question was related to India business, where you have said that in HI as well as in hair colors, category development will be the core job to do going ahead. Now, what we understand is, through our channel checks that there has been, before the category development happens, GCPL has been focusing on discontinuing some of its, non-moving SKUs across categories. So would that, and it would, as you had said in December, that you would also focus on bringing down the inventory levels, the old way of working. So did that have any impact in the current quarter, or if not in the current quarter, would it have some amount of impact on sales in the in the coming quarters? Yeah, that's it.
I mean, look, my general experience on inventory and SKU reduction has been like benefits pretty soon. And I anticipate that to happen. I feel like we will go behind inventory reduction. I think it will be a key KPI for us next year. And no, I don't expect inventory reduction to lead to a loss in volumes. We will not, obviously we will be sensible when we cut inventory and not things which are a strong consumer franchise. We will not obviously cut that.
Okay. And any view on SKU reduction? I mean, that will really boost the result, right?
I mean, in general, both inventory and SKU reduction, it usually takes up volumes because, the pipelines are clogged, and when you clean the pipeline, what moves fast tends to move faster. So it's generally a good thing to do. One obviously has to be sensible about both SKU and inventory. But given that premise, these are both good things to do.
Okay. Yeah, that's it. Thanks.
Mr. Kundu, is that answer your question?
Yeah, that answers my question. Thanks. That's it.
Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Shirish Pardeshi from Centrum Capital. Please go ahead.
Yeah. Hi, good evening, Samir and Sudhir. Thanks for the opportunity. I have 3 questions. The first question, I'm harping on what you tried to explain us from the distribution. Would you be able to share our net distribution or weighted distribution for the categories like soaps and HI, and further if you can break it up urban and rural, so that will give the confidence what is it that we are looking the development.
I don't think we can share our internal distribution numbers. These are relatively easily available on AC Nielsen for the categories, so I'm sure you can pick that up from there. But I mean, I can tell you that the distribution is very good. It's a strong suit in India. I mean, beyond that, I don't know, Samir, whether we should be able to...
No, I'm sorry, Sarish. I mean, can't share this. I mean, from confidentiality perspective, it's sort of larger, public domain, right? I mean, the reach, direct, indirect, as well as the rural, urban, that too.
At least, Samir, you will be able to share what is the difference between in terms of the larger opportunity we are talking about. I mean, I agree that the Nielsen numbers are not freely available, and we don't have the access to that. So maybe if you can give some more color qualitatively.
Yeah, I think what Sudhir shared right earlier, I mean, it's not just physical reach, but also mental reach, right? And in soaps, we are well distributed in terms of reach. We just need to, kind of leverage that soaps distribution reach for HI and hair colors. But before that, we need to kind of invest in terms of generating the demand, especially in rural or even, with urban poor, consumers. So that's going to be the approach, right? I think the other piece is not just going to be increase in reach, but also increase in productivity in the outlets in which we reach. So that's the other thing which we are going to work upon in terms of unique lines and so on and so forth.
Okay, thank you. My second question is on the price. Would you be able to share how much price increase has gone into in 9 months this year, and the overall weighted the inflation which we are having at this point of time?
Yeah, I mean, if you look at the latest price increase, it's there in the update also, Suresh, it's around, kind of 7-8%. On a full year basis, I think our price increase would be, I think, mid-single digits, thereabouts.
And the inflation, what is weighted today?
Well, I think it's very choppy, right? And you have to kind of bake in not just, here and now replacement rates, but also what's gonna be, kind of expected, commodity prices over a period of time. It's going to be also dynamic, right? We have called this out that we will be competitive in terms of taking price increase, but we also would kind of keep an eye on, what's happening on the volumes front. I think at this point in time, ceteris paribus, we do believe that, our price increases, which we already taken, some of the price increases, which will continue in coming, months and quarters, should result in overall, sequentially improving, gross margin. So I think that, kind of guidance or strategy, at least in medium term, continues until unless there is a big, kind of spike up in inflation, especially in palm, even from current levels.
Okay. My last question to Sameer. We have seen the senior management changes in this quarter, and maybe Sudhir can add, is there any further senior management changes are required to drive the strategy and the distribution expansion, or is there already implemented, or there is no more departure which will happen?
Hi, this is Nisa here. I think, we do have changes that have happened even before Sudhir has come, so I don't think there's any guarantee about, no changes happening. But I think Sudhir, and some of these are obviously even regretted losses, people leaving that we'd rather retain them. But I think Sudhir is very focused on making sure that, we have the best team possible in place. And, he's stated quite publicly also that his preference is to give opportunities to people within GCPL. So I think you might see the one-off people leaving, but there has been, which I think Sudhir touched on, the sort of global category team that's been created, all with people internally, which is, already doing some really sort of good work, especially preparing for next year. So I think to your answer, we will always keep looking to have the best possible team together, and our preference will be for, internal leadership.
Yeah, thank you, Lisa. Thanks for the information, and all the best to you and the team.
Thank you.
Thank you. The next question is from the line of Ashit Desai from Emkay Global Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So Sudhir, Sameer, if I look at the domestic staff cost, the 9-month run rate is somewhat similar to what it was in 2018. Any changes or thoughts on how and what the sales incentive structure is? And also from an accounting perspective, the variability we have in staff costs is very different from what most other FMCGs have.
Yeah, so Ashit, we have called this out in the past, right? Because we have this variable performance-linked variable remuneration, which in turn is driven by business performance. And the reason why in current quarter, as well as, on a 9-month basis, the employee costs are lower, that's purely because of, especially in India, because of the relatively lower, kind of performances. And we also moved the metric couple of years ago, what was only EVA to EVA plus, kind of sales. And maybe at the right time, we'll also share with you all as to what the, kind of metric, kind of going ahead. So yeah, the variability is there, but it's largely driven by the performance-linked variable remuneration, which in turn is driven by business performance.
And any thoughts on the sales incentive structure? Any changes to that?
What do you mean by sales incentive structure? Do you mean the below the line, or do you mean the incentives we pay to our sales teams?
Incentives to sales teams.
No, I don't think there's any change in thinking there.
Yeah, there's no change. There's no change over there, Ashit. On that front also, In terms of quantum, it's too small to move in either way. Yeah.
I mean, certainly, look, I mean, strategically, going back to one of the earlier questions, our intention is to, get more value from our FOH. And, I presented the last time as well that, we are getting people to do bigger jobs and more jobs and so on and so forth. So strategically, this is an area that we will continue, especially in a time of inflation like this. One of the ways in which we will hopefully deliver both EBITDA and A&P is to squeeze out any non-consumer facing costs. And that's very much part of the strategy.
So would you say, the staff costs have been flat? The reason is more to do with lower performance-linked incentives, or these are larger changes within the organization?
No. This is largely, lower, kind of variable remuneration because of business performance. As we called out, the overall controllable cost in which, employee cost is a subset. It's something which will, kind of kickstart from, next financial year, Ashish.
Got it. Thanks. That's it from me. All the best.
Thanks.
Thank you. Ladies and gentlemen, we will take that as a last question. I now hand the conference over to Mr. Prateek Dantara for closing comments. Thank you, and over to you, sir.
Thank you, everyone, for joining. Stay safe, stay healthy. Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.